Hey guys, welcome to our channel at Tax Fighter Services. I am Mary Triandafilidis, the founder and CEO of Tax Fighter Services. Now, in the last 10 years, we've worked with thousands of clients nationwide, helped them resolve their tax issues from personal to business accounts. This video is not tax advice. We are going to talk about different IRS and state programs available for taxpayers. Now, before we jump into our daily topic, you are more than welcome to go to our website and schedule a free consultation at taxfighterservices.com, or you can call us directly at 888-575-9156. Don't forget to like and subscribe our channel, drop us a line on the comments, and we'll get back to you. We're going to talk about offer in compromise. I do have a lot of clients that ask me questions. How does the program work? Who qualifies? Who doesn't? What is the process? So let's jump into it. Let's explain to you the process. An offer in compromise is a settlement agreement between a taxpayer and the IRS that allows the taxpayers to resolve their tax debt for less than the full amount owed. It is typically considered when the taxpayer demonstrates an inability to pay their full tax liability, with the IRS evaluating their taxpayer's financial situation, including income, expenses, assets. Now, if accepted, the OIC allows taxpayers to clear the tax debt and move forward without the burden of unpaid taxes. Okay, so let me explain to you what is an offer in compromise and who qualifies in layman's term. Basically, I have to be able to prove to IRS if you sold everything you own, property, land, 401k, IRA, stocks, bonds, CDs, boats, jet skis, yachts, if you liquidated everything and you can't come up with the amount you owe. So for example, if you owe $50,000 and you sold everything, you can't come up with $50,000, then you could qualify. That's one of the qualifications. Now, you can't have, $300,000 sitting in a 401k plan and you call me and say, hey, Mary, get me an offer in compromise. And I'm going to tell you, can't help you. You're not going to qualify. It's automatic disqualification. Now, if I can prove you don't have the funds and assets to sell to pay it off, that's one qualification. Number two, we have to talk about disposable income. For example, if you make $10,000 gross, we have to calculate the taxes you would pay, and then there's something called allowable expenses. So if you pay $10,000 mortgage, some states and some counties, there's rules that don't allow that high of an expense. So for example, if you're in Texas and your allowable mortgage expenses and utilities hit $2,900, but you paid 10 grand, the difference in that will be considered disposable income. It's not an allowable expense. So with that said, we would do a full financial interview. We would look at your income, expenses, allowable expenses, and look at your disposable income. If your disposable income doesn't allow you to pay off your debt within 24 months, then we can get you qualified for an offer in compromise. That's another qualification that you have to meet. Another qualification is compliance. So basically, you have to have your tax returns filed all up to date for the last 6 years. Now let me get into that, how that works. There's something called an ASFR. If you don't file your tax returns after 3 years, IRS has the right to file it for you. So what that means is after 3 years you don't file, IRS will take your total gross reported income, tax you the highest tax bracket without giving you any proper credits and deductions, send you a bill and say pay for it. Their mentality is if you cared about your deductions, you'd file your own taxes. Now, if you have an ASFR, that's okay when it comes to an offer in compromise. Now, if you file 3 years and the other 3 years are ASFRs, we would necessarily not go back and file those returns to adjust the debt amount because we want the debt to be higher, so it's easier to get the offer in compromise approved. So basically, one of the compliances, all last 6 years have to be filed. If you're missing returns and you don't have substitute filing for returns filed against you, we have to file those returns and then prepare for an offer in compromise. The higher your debt amount is, it's easier to qualify. So that's why we would not go back and file those missing returns if you have ASFRs filed against you. Now, let's talk about bankruptcy. You cannot be in bankruptcy. If you are in bankruptcy, IRS will not even look at your application. You cannot be in an audit. If you have an open audit, they will not touch it. You have to have your audit finalized and closed. Then we can move to the step of filing an offer in compromise. Let's see here. Now, if you don't qualify for an offer in compromise, if I can't prove to IRS that you can't pay this debt back within 5 years, whatever your disposable income adds up to be, do not file an offer in compromise. I've seen it where bankruptcy attorneys will tell the client to go file an offer in compromise. In all of reality, they don't qualify. Guess what happens? Your statute of limitation time clock restarts. Now, let me cover that really briefly so we don't get into details. I'll make another video about that. IRS has 10 years from the date the debt was assessed to collect your actual debt. So if your tax debt was, for example, you filed your tax return in 2014 on April 15, right? If it was filed on April 15, IRS had until April 15 of 2024 to collect. So that's the 10-year statute mark. If you file an offer in compromise and you don't qualify and you hired a different firm and they just took your money just to do an offer in compromise, you got denied, your statute of limitation time clock restarts from the date it was denied. So be very careful when you file an offer in compromise. We want to make sure you fully do qualify, because if you had debt that was going to fall off in 2 years and you did an offer in compromise, guess what? You just lost all the 8 years. Now it's a brand new 10-year start time clock. So be careful with that. Keep in mind, penalties and interest will continue to accumulate until the offer in compromise is accepted. So that's a given. Like, you can't stop that. There's no way to that. What I also want to talk about is, please make sure you do your research on a company before you hire them for an offer in compromise. I've seen a lot of situations where case managers or company employees will promise and say, yeah, we can settle the debt. And when they called me, I told them, I'm sorry, I cannot help you. You wouldn't qualify for an offer in compromise. Now, just because you don't qualify for an offer in compromise, it doesn't mean there aren't other programs available. There's a program called the penalty abatement. There's a program called the currently non-collectible status. We can do a partial payment plan. We can do a payment. I mean, there's so many different things we can do. And all our cases are custom designed to the client's needs and qualifications. So be very careful, do your due diligence. Another thing I want to talk about real quick, I want to jump back into bankruptcy. Do not file bankruptcy for tax purposes. If you file for bankruptcy, your statute of limitation time clock will restart. Now, if you are filing bankruptcy for other reasons, then go for it. But if you're doing it for tax purposes, it's probably the worst advice anybody can give you. So if you have questions on that, give us a call. You're more than welcome to call our office directly. You can drop us a line of comments on here. I will reply to you. My email address and my direct contact will be on the description of this video. Call me. I'll be happy to assist you and answer your questions. But be careful when it comes to bankruptcy. We want to make sure you don't restart your time clock just because of tax purposes. Once an offer in compromise is accepted, you have two options. You can do a 5-month payment plan with a down payment of 20%, or we can stretch it out to 24 months, but you have to pay a higher amount on the offer. Now, there's a $205 application fee which needs to be paid with the offer in compromise application. So, there is nothing free in this country. We have some conditions that come with accepting an offer in compromise. The conditions are as follows. IRS has the right to file a lien on your property, and the lien will not be removed until your offer in compromise is accepted and paid off. So you can be in the middle of a payment plan on your offer. They will not remove it until it's paid for. One more thing. You will forfeit the refund for the calendar year on the tax returns, and you will not be credited for your offer in compromise. So if you were going to get a refund this year, you're not going to get it, you're going to forfeit it, and it's not going to be credited to your balance for your offer in compromise. Now, as for the states, some states have offer in compromise programs, some don't. The rules are different for each state. So contact our firm to find out which state has an offer and compromise program. All right, guys, so if you watched this video all the way to this point, I'm sure you're going to have a lot of questions. Give us a call. You can call us at our 888 number. You can go to our website to schedule a consultation. You can actually schedule a consultation directly with me, or you can send us an email if you have any questions. I will get back to you as soon as possible. Don't forget to like our videos, subscribe. We will be adding a lot of new videos for different programs, different topics. Look out for that. You can check us out on Instagram and Facebook, or drop a comment down here and we'll be happy to answer it to you. So thank you so much. Have a blessed day. We will talk soon.